In the late 1990s, people became millionaires overnight and then lost everything just as fast. Imagine waking up one morning and realizing you're a millionaire. It's not because you built a factory, not because you invented something real, but because you bought a stock with a comma at the end of its name. In the late 1990s, this dream felt unstoppable. College students quit school. Office workers quit jobs. Taxi drivers gave stock tips. Everyone believed the same thing. This time is different. But then, in just a few months, trillions of dollars vanished. This is the true story of the dot-com bubble, how millions got rich and how millions lost everything. Welcome to Finance TED Official. The birth of the internet dream in the early 1990s, the internet was still new. Slow connections, simple websites, but enormous potential. Suddenly, emails replaced letters, websites replaced phone books, online shopping replaced malls. Investors didn't see the internet as a tool. They saw it as the future of everything. And when the future arrives, people want to own it. Wall Street falls in love with .com. A simple rule took over markets. If a company has a website, it must be valuable. Companies with no profits, no customers, no clear business model were valued at billions of dollars. 8. Because analysts said, growth matters more than profit. Earnings come later. Old rules no longer apply. Investors believed them. The IPO gold rush. Initial public offerings became instant jackpots. Company could start in a garage, go public in months, make founders millionaires overnight. Stocks doubled, tripled, sometimes 10x in one day. Employees were paid in stock options. Paper millionaires were everywhere. People stopped asking, how does this company make money? And started asking, how fast can I buy before it goes higher? Pets.com and the symbol of madness won. Company perfectly symbolized the bubble. Pets.com sold pet food online. Heavy shipping costs, massive losses yet. Super Bowl ads, celebrity endorsements, huge investor money. Pets.com burned cash faster than it earned attention, and still, investors kept buying. Why? Because belief had replaced logic. Everyone becomes a stock genius. This wasn't just Wall Street. It was office lunch breaks, family dinners, taxi rides. Everyone had a hot stock tip. People borrowed money to invest, used credit cards to buy shares, refinanced homes to chase tech stocks. Risk didn't feel dangerous. It felt necessary. The NASDAQ goes parabolic. The NASDAQ index filled with tech companies exploded upward. Between 1995 and 2000, it rose over 400%. Charts went vertical. Media celebrated new economy, permanent prosperity, end of boom-bust cycles. But history always warns us, when charts go vertical, gravity eventually returns. The first cracks behind the hype, reality was quietly knocking. Many companies burned cash every quarter, had no path to profitability. Survived only on investor money, interest rates began to rise. Capital became tighter. And suddenly, investors asked the forbidden question, what if these companies fail? The bubble bursts in early 2000, selling began. At first it looked normal, then panic spread. Stocks fell. 10%, 30%, 80%, 90%. Companies shut down overnight. Employees lost jobs and savings. The NASDAQ lost nearly 78% of its value. Trillions of dollars erased. Dreams turned into debt for many. This wasn't just financial, it was personal. Retirements delayed, homes lost, lives rebuilt from zero. People who felt smart months earlier felt foolish overnight. Markets don't care about belief, they care about reality. The survivors, Amazon, Google, and lessons. Not all companies failed. Some survived because they built real products, created real value, eventually earned profits. Amazon lost over 90%, but survived. Google arrived later, more disciplined. It proved hype without fundamentals is deadly. Why this story still matters today? Every generation believes. This time is different. We hear it again with crypto, AI, metaverse, meme stocks. Technology changes. Human psychology doesn't. Greed, fear, and hope repeat perfectly. The dot-com bubble wasn't just about technology. It was about belief overpowering discipline, about stories replacing numbers, about forgetting the simplest rule of investing. Value matters. fortunes were made. Fortunes were destroyed. And the market moved on, as it always does. If you want to understand money, history, and the forces that shape your future, subscribe to Finance TED Official. Because markets change, but lessons remain.